MSC Industrial, MSM is the ticker on the New York Stock Exchange. Good little company, but actually missed earnings and shares were down. We agree with it. It's just kind of uninspiring. I don't know how else to put it. And that's exactly the title I used last time. They're in the last quarter, uninspiring. And I'm sticking with that. This quarter was very similar in that regard. It's just not inspiring. I don't know what else to say. Look at the earnings per share analyzer below the graphic, the logo there. And what do we got here? Let's see. So revenue was up 4.6%. Like I said, uninspiring. Earnings per share was up 3.6%. Uninspiring. And it missed. And it missed not by a lot, but you know, it's certainly not anything to get excited about. Now, having said all that, I don't want to go too crazy on this company. It's not terrible. It's actually quite a good company. But what I would do is I try and give you some kind of strategy, right? I'm trying to give you an idea here. I just put this on our radar screen. Let's jump to the model. Oh, that's not the model clearly. Okay, well here's the actual financial statements, and yeah, I'm a little bit all over the map here, but just bear with me 1 second. Okay, so the top line actually doesn't look too bad, right? 11%, 8%, then down to 7%. Okay, a little bit worse. But look at the EBITDA line here. Just getting worse. 131, 123, and this revenue's going up. 118, 112. So it's just getting, you know, a little bit worse, a little bit worse. And then now this quarter, you know, again, it's even slower. So it's just not inspiring. Now, having said all of that, it's actually a pretty good company, right? Look at the long-term track record of return on invested capital. Pretty good. I will say, look at 2012, it was 25% return. It's just trickled down, not in any dramatic fashion, down to 18%. You know, kind of just slowly but surely eroding. I think that's what we're going to get when this quarter hits our database as well. Having said all of that, this is the kind of company I will buy. But give me something in a quarter. Give me just some kind of juice to the quarter. Give me an 8% growth and a beat. You know, 8% growth line and a beat on the bottom line or something like that. And then I can get, you know, a little bit back into it. I mean, shares are down 15% this year. They're down to 4% on a 5-year CAGR basis, so you've lost 4% 5 years in a row. Oof, you know, that's just not great. It's reasonably priced, I would say. Not good enough reason to buy it, though. Just give me something on the quarter. Give me something, please. But I do like this kind of, you know, good consistency. So we just need this to uptick and give us a little bit better quarters. If we start seeing this return on capital rising again, and, you know, like I said, 8% growth and beating, then all of a sudden this is going to be an interesting story again. But for now, we don't need to go there. Quick look at the dividend chart. It's yielding 3.4, so that's interesting. And let's take a quick look. Oh, that's a nice, actually, looking dividend chart. So another reason to put it on your radar screen, or, you know, even some of you, if you're quite conservative, it's actually not a horrible idea because you get that dividend. You're kind of paid to wait, but I think you'll be waiting. Okay, but you'll at least make the 3.4%. But at the same time, you might lose it on the capital gain side. So I'm uninspired by it. I think I've said it enough times. I think you know where I stand on MSC Industrial. MSM is the ticker on New York.